This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello and welcome back. I'm your host for today, Annie Kane. Last week, a new inquiry into how lending and financial regulation is impacting home ownership was launched by the Senate Economics References Committee. The inquiry seeks to explore ways to reduce lending costs and improve accessibility for first home buyers amid continuing servicing pressures and high repayment costs. So in this episode, I'm talking to the chair of the Senate Economics References Committee, also the Shadow Assistant Minister for Home Ownership, to find out the big issues the committee aims to address with this inquiry, how evidence for the inquiry will be formed, and what else can be done to improve first home ownership in Australia. Joining me today is Senator Andrew Bragg. Thank you very much for joining me, Senator. How are you doing?
Hi, Annie. How are you?
I am very well, thank you, and very excited to be talking to you about this big inquiry into home ownership. Now, home ownership has long been called the Great Australian Dream, but you actually recently said that you believe the dream is slipping away from younger Australians. What do you think is causing this?
We haven't built enough houses, which is a major issue. And if you don't build houses, then you won't be able to solve this crisis. So everything here starts with a supply focus. But there are clearly things we can do on the demand side, which can help first home buyers. And we want to try and tilt the scales in favour of first home buyers, prospective home buyers. I think there are opportunities for us to look at the cost of lending regulation, looking at things like the 3% buffer, looking at HEX issues. These are all things that I think potentially are retarding the ability of first home buyers to get that elusive first mortgage.
Yeah, absolutely. And of course, we have seen recent research released by the Parliamentary Library showing that the dream is actually unachievable for the top 10 most common professions, although we had some questions ourselves on some of the data that was used for that. The 8.8% rate they used, we thought was a little bit high. But of course, we are seeing generally across the board lots of people struggling to access mortgages, struggling to meet the servicing requirements. You mentioned there the buffer. APRA continually has maintained that its 3% buffer is appropriate. Some banks also have the ability to introduce a 1% exception. What power does the committee have in actually recommending prudential standard changes?
Well, I mean, we're the Parliament of Australia, so we will make recommendations that we think are in the public interest. The Commonwealth runs the banking policy. We run that under the corporations power in the Constitution, so we will make the laws that we think are appropriate. Now, it may be the case that a 3% margin was a very prudent measure during the GFC or during the COVID crisis when the rates were lower. Maybe now rates are closer to a peak. It may not make as much sense to have a 3% buffer, and that's something that we want to explore, because if that is the thing that is stopping some first home buyers from getting that first mortgage, then it needs to be part of their suite of policies to solve the housing crisis. Now, there are no silver bullets on this housing issue. That's just the bells ringing in Parliament here. And as I say, you've got to build more houses if you're going to solve the problem. But there are still avenues that you can deploy to tilt the scales in favour of first home buyers. Now, in some other countries, they have different capital arrangements for first home buyers. So that's something that we'll look at.
Yeah, of course. And I think, we've been hearing from the broking associations, for example, not only suggesting that maybe buffers need to be reviewed, but also that they could be maintained at the level they're at during assessment for the life of the loan. So, for example, we have this issue of mortgage prisoners, some people are calling them now, where they were serviced on a 2.5% buffer, now having to look at a 3% buffer when they change. Do you think that's something that could be looked at, is sort of maintaining the buffer that you're assessed at through the life of the loan?
Look, clearly we want to try and help everyone. But our main focus is on ensuring that more first home buyers can come into the market. Now, in the inquiry, we are looking for the ideas that industry has. So I'm hoping that the mortgage brokers and the banks and the other financial institutions can raise some of these issues on behalf of their customers, because I think they're going to be best placed to give us that sort of advice. Now, if there are things we can do for existing mortgage holders, then we will look to recommend them.
And specifically, I think we've got until a few more weeks until the 26th of September for submissions to be submitted. But what do you really sort of hope to dig into? I mean, you mentioned some of the things there, like the buffers and taxation, HEC step being other parts. What are the main issues that you really want to try and unwind and unpack in the inquiry?
Well, I want to understand why it's so hard for developers and builders to get access to finance. I want to understand why banks can't do more, because there's a heavy reliance on private credit in Australia now. That's on the sort of the wholesale side of the market, if you know what I mean. Then on the retail side of the market, where people battling to get mortgages, we want to look at the buffer, we've discussed that, and we want to look at the HEX issues. I mean, the HEX issues are really quite fraught because there are many younger people now that are finding their HEX debts are bigger than perhaps they ever imagined they would be, and they are retarding their ability to get that first loan. So we want to look at options for trying to help them with their HEX debt. Now, there are a range of options there, and we're looking for ideas. I mean, we're in the market for ideas. The point of the Senate committee system is to try and solicit the best ideas that are out there.
HEXA, of course, as you said there, a big thing for a lot of young Australians. One of my colleagues was saying the other day his HEX debt's about $37,000, and that impacts his servicing by over $100,000. So really looking at, for him, you know, making that home ownership dream a little bit harder, or really a lot harder. Do you think lenders are being overly conservative when it comes to home lending to first home buyers?
Well, I think that they're just complying with their regulatory obligations, and I think their regulatory obligations are extremely complex and duplicative and expensive. Now, the responsible lending obligations overlap with the prudential standards, for example. I mean, the fact that banks can't take risk is very bad for the economy and very bad for first home buyers, because for a lot of people who are perhaps older now, they would look back on their first loan they got from a bank and they probably reflect that the bank at the time took a punt on them. Now, these days, they can't take a punt. So, look, there is a heavy burden of regulation in Australia in relation to lending, and we will be looking at ways that we can deregulate.
That will be, I think, music to a lot of people's ears. We want to pick your brain further about that, and we'll get into that in just a second.
Imagine being rushed to hospital.
Yep.
And your life changing in an instant. Imagine going through hundreds of tests and 46 weeks of chemo. Now imagine you're a child. That's why Starlight exists. To bring happiness to seriously ill children. Please donate at starlight.org.au.
We've said that the inquiry will be about people, though, not institutions. Could you extrapolate a little bit on that? What did you mean?
Well, I don't want to be too political, because I know that your listeners will probably get turned off by politicians being too political, but the Labor government is obsessed with trying to help their mates in the big super funds, and their housing solutions are around institutions providing build-to-rent stock. For example, financed by foreign fund managers. They have a bill in Parliament to cut taxes for foreign fund managers, and then they're trying to help CBUS and these sort of funds build houses. So, I mean, I just think that's a warped agenda, and we don't like that idea. We want people to own houses, not institutions. So when I talk about that, that's what I mean.
And yesterday you introduced a bill looking to actually ban CBUS from any involvement in the Housing Australia Future Fund. Could you walk us through that decision?
Yeah, well, the Liberal Party has decided that we do not think that the CBUS Super Fund, which has 3 CFMEU trustees on its board, is an appropriate business for the Commonwealth government to do business with. We don't think that the CFMEU is helping housing. We think the CFMEU is adding a 30% tax onto major apartment developments where they're involved because of their corrupt practices. And they're also have been complicit in the Labor government bringing in, look, and I should say this, that, I mean, we all at times have stiff backs and we like to go to yoga, and it's a very laudable thing to do. But the country needs more builders than it needs yoga instructors right now. And the CFMEU has told the Labor government they couldn't bring in any tradespeople because they're obviously fearful that they wouldn't join the union. So, look, for all of those reasons, the CFMEU is not a good body to be involved in a government housing scheme.
Now, of course, you've seen a lot of headlines at the moment about this issue. And of course, a lot of our titles have been covering it. But we've been talking a lot about building and making sure that supply is coming online. The Albanese government has a target of building 1.2 million homes in the next 5 years. We're currently a long way off this. How would a Liberal or coalition government look to improve housing supply and address what many are billing as a housing crisis?
Well, we have to look at how we can have a better system of encouraging the states, or maybe even finding a way to punish the states if they don't comply. The 1.2 million target is a joke. I mean, there's 300,000 short of that, and that will never be met. So we will have a supply policy before the election that will be much stronger than that. We understand how important it is to solving the housing crisis.
Can you give me any sneak peeks into what those would be?
Well, I mean, as much as I'd like to announce our policies on your show today, I can't do that. We are still, Peter and others will have more to say. There'll be more speeches in weeks ahead and more things to be said about housing. But in terms of the supply policy, that's still under development.
And of course, looking at things like home ownership, we do also have some things that are yet to pass Parliament. For example, the Help to Buy scheme. What are your thoughts on the efficacy of these schemes in improving home ownership?
Horrible. The Labor Party have had 4 housing policies. They've had the Help to Buy scheme, where the government owns 40% of your house. That was the centrepiece of their last election campaign launch. They haven't even brought that bill into Parliament for a debate or for a vote. So they're obviously ashamed of that policy. Secondly, they've got the housing targets, which we just discussed, have failed. Thirdly, they've got the Housing Australia Future Fund, which is a multi-billion-dollar boondoggle fund, which has built no houses. And then they've got I would say their worst policy, which is big call, the build-to-rent tax concessions, which is about getting foreign fund managers to build and own Australian housing, so an Americanisation of our housing stock. I don't think that having BlackRock and Vanguard own our houses is a good idea.
Why?
Well, I want people to own the houses.
And when it comes down to taxation, one of the points of the inquiry, lots of people looking at, will there be questions around stamp duty and negative gearing and sort of investor taxes, I suppose. What are your thoughts around taxation currently in Australia and how that impacts, if at all, how's home ownership?
Well, I think the state's taxes are very bad, but we're not in a position to change the taxes that they levy. In terms of our own taxes, look, we don't favour raising taxes on property. We don't favour fiddling with negative gearing or capital gains tax. We don't think that increasing taxes is going to be productive for solving the housing crisis. Now, that may be something that Labor want to do, and we wouldn't support that.
We'll take a quick break here and we'll be back in just a moment. Another big question we're having at the moment is around financial literacy. And are people aware of what they are required to do when they're accessing a home loan? Of course, more than 74% of borrowers now use a broker to access a mortgage, and 80% of loans under the government guarantee schemes are facilitated by mortgage brokers. They have a strong role in providing financial literacy education and helping home owners get onto the property ladder. What role do you think brokers play in supporting first home buyers in achieving the great Australian dream? And have you ever used one?
Yes, I have. And I've found mortgage brokers to be excellent. And I'm a supporter of mortgage brokers in general. I think they give customers very good choices. And a highly concentrated market is not going to be in the best interests of customers and the economy. So we want to see lots of choices. And I think that the mortgage brokers, which obviously have been through a lot of reform in the last few years, do an excellent job. So, the mortgage brokers, I would say, would be the people I'll probably want to hear from the most as kind of consumer advocates here, because they're the people that are closest to the ground in terms of understanding the challenges people face in getting financing. They work so closely and so diligently with their clients. So if we don't hear from mortgage brokers, I don't know that it'll be a very good inquiry.
I'm sure you will do, Senator. But looking at, obviously, as your role as Shadow Assistant Minister for Home Ownership, what sort of things do you want to see in that role sort of really brought to light to help improve home ownership in Australia?
Well, my role really is to try and ratchet up the amount of first home buyers that we see in the market. So if we were in government tomorrow, that would be my key measure. How we go from 20% to a higher rate. So a few years ago, we were sort of in the mid-20s. Now we're down to 20%. And so that's the key measure. So I think you've got to apply a whole lot of different policies. Clearly, you need to build more houses. I think you should deploy superannuation. I think we need to look at these lending issues. And there are a range of other things that we can do around skills and labour. So there's probably 10 or 12 policies that you need to solve the problem. There's no silver bullet here, unfortunately.
So just going back to the inquiry process now, as I mentioned earlier, the submissions are currently open for evidence, and I'm sure many in the mortgage broking industry, real estate industry and lending industries will be submitting. But how do you then choose who you'll hear evidence from? What's the process after receiving the submissions?
Look, I think we will look to hear from a range of people, bigger organisations, smaller organisations. The quality of the submissions and the amount of data in the submissions will be key. And any particular insights, like new ideas. We'll put a premium on new ideas, right? I'm going to finish my report by December, and I am in the market for ideas. I'm in the market for data. So those are the two things that people should go along on.
Wonderful. Senator Bragg, thank you so much for your time today and joining us here on our podcast.
Thanks, Annie. Nice to talk to you.
You too.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Feeling trapped by rising interest payments? Escape from mortgage prison with expert refinancing assistance from Finny. We have helped hundreds of borrowers break free from higher loan repayments by finding a more suitable loan. Our expert team can quickly assess your situation, and if there's a better lender available, we'll find it fast. Don't delay. Call today. Speak to a Finny mortgage specialist on 02 8866 2444 or visit our website at www.finny.com.au.